Hello guys and welcome to another video. My name's Mark, I'm an entrepreneur and property investor, and I have a massive vested interest in what's going on in the UK right now, as I've got £3.5 million worth of property and my businesses and everything are located in the UK. Although I'm currently living in Dubai, I know that what's been said today in the autumn statement is incredibly important. So today, what I want to do is give you my perspective on that, and I think it goes way beyond what was said. I think what was said was interesting, but I think what wasn't said is key. And how that translates into some of my investing decisions, I want to share with you, because I think there's a lot of insight that can be given to what was done today in the autumn statement. So first of all, I want to preface this with the fact that the Chancellor has decided that we're going to start giving some money back to the UK people. So basically, we're looking at high inflation that's come down. So it was, I think, 11.6%, currently running at 4.5%. So inflation has reduced, but the economy is slowing. And if you look at the growth forecasts, and I think this is really interesting, and I'll go into that in more detail later on in the video, but I know that 0.6% was the growth that the OBR has forecasted for the 23-24 period. So from April 23 through to April 24, 0.6%. Over that period, inflation is likely to have run on an average basis during that period, I reckon somewhere around 5-6%. Which means that's another big contraction. We had no growth last year, and we had a big contraction due to inflation in real terms. So for example, if you've got no growth and inflation runs at 10%, well, you contracted by 10% in real terms. And this has happened for 2 years in a row, where we're not gonna have a real terms growth, we're gonna have a real terms contraction, but a nominal growth. And I think what's really, really interesting about all of this is it's preloading a spring for the economy to really bounce back in the future, especially with property prices, because they have contracted. So let me go through a little bit of detail about what was said. First of all, a 2% reduction in NI, that's a give back to all the people who are working, self-employed or employed. You're gonna have an average of £450 extra a year in your pocket. This is to spur on growth. This is to spur on spending. This is an announcement off the back of recognising that retail sales are at the lowest point since lockdowns. That's unbelievable. Since lockdowns, retail sales are at the lowest point. And that means that the average consumer is not spending what they used to. And this is despite prices being higher, right? Prices are now 20% higher and they're spending less. In nominal terms, not in real terms. In real terms, they're spending significantly less, like 20% less. But in nominal terms, they're even spending less. So that is the important thing to remember. Now, what else was announced? 8.5% on pensions. So if you're a pension age, you're gonna get 8.5%. All of that money traditionally triples back into the economy one way or the other. Benefits are gonna be squeezed, trying to get more people into work. Again, probably to free up the supply of labor and to make sure that more people are more productive. So all that I've heard in all of this is an autumn statement that's geared towards trying to kickstart the economy again. I think inflation has come down, down, down. Everybody can see where it's going. But the big question is, when you go forward 12 months from now, what does the economy look like? And I think it probably looks quite messy. So, what do I think this really means for me as an investor and for you watching this video? I think it represents a massive opportunity, because I think it signals to ourselves and the wider market that the period of tightening is over. The period of loosening has begun. And it starts with government, but it probably continues with the Bank of England very, very shortly, because they're looking at the same data. They're going to be recognising the same warning signs. They're going to see the same things happening. Now, granted, the government have an election to fight in 2025, so they've got to try and get people feeling more wealthy. But the Bank of England have a pound to protect and a country's economy at stake. So their stakes are even higher. And I believe they're both looking at the same data. Now, the Bank of England haven't risen rates for a couple of months consecutively now. I think the period where the Fed is looking at the same data, and I think inflation in the US, if I'm right, and I'm actually going to check this, US inflation at the moment 3.2%, only 1.2% above their target rate. That's coming down quickly, and month on month it's come down from 3.7 to 3.2, less jobs added. There's lots and lots of data that would suggest that the Fed in the not too distant future will need to change their strategy. And that will be a signal to the rest of the world to do the same. So what will this mean for the markets, for the property, for all of those assets? Well, they're going to rise in value when money becomes cheaper. And I think, and this is just an opinion, I think it's inevitable that money becomes cheaper. I think it's absolutely inevitable. We're in a world where information flows so quickly, it is impossible for just having capital to be the valuable part of the equation. Capital used to be expensive, but we've got addicted to cheap credit, and it's just impossible to unwind that without significant damage to economies all over the world. Now, there will be people who will be commenting on this going, yes, it's the end of the world, it's the Great Reset, everything's going to change. I don't believe that for 1 second. I believe America always wins, and that's always been kind of the rule. And with that in mind, America will make sure that they position themselves to always win. And that's going to mean lower interest rates because they're going to want more growth. They're going to want to make sure that their population are not priced out of properties. The stock market's growing, the value of companies is growing, the value of wages is growing, all those things are growing. And they're going to do that, in my opinion, by reducing the interest rates. It's worked over and over again, and it's likely to work again in the future. So that's my opinion. And I think as soon as the Fed do it, then that allows the Bank of England to do it. Now, why does that allow the Bank of England to do it? Well, it's simple. Most things, commodity-wise, are priced in dollars worldwide. So if the value of the dollar is really, really high, as it is at the moment, because interest rates in America are high, so why not buy the dollar? Once that starts to come down, the value of the dollar decreases, and it means that the value of things like petrol, oil, all these other commodities like gold, they all start coming down relatively for the pound because the value of the dollar decreases. Once that happens, it allows the UK Bank of England to reduce its rate for those reasons. Now, it may do it domestically anyway. They may have to do it domestically anyway in order to protect the UK economy. But the Fed moving will allow the Bank of England to move, I'm certain of it. So, my opinion is next year we're going to see interest rate cuts. When? January, February, March, something like that. I think the Fed's going to start moving. I think we're going to have a really good 2024. I think the US government are going to want to have a really good 2024 because they've got an election year next year. We've got an election year in 2025. January is the latest, I believe. They can call it at any time, but I believe they'll leave it as long as possible because ultimately the economy is going to have a much, much better 24 than it has 23. So I believe that now might be the last opportunity to buy the FTSE, for example, at a 20% discount. I mean, it's down 10% from its record highs, and inflation's run at about 20% during that period. So it's down a significant chunk in real terms. And once the cheap money returns to the economy, once people can borrow cheap again, I just see things flying. So I'm positioning myself, get some cash on the sidelines, buy some more assets, make sure that I'm negotiating hard on properties. As people who are watching this channel know, I've bought a couple recently up in Sheffield. I'm gonna save up for another couple of months and buy another one. I believe now is the time. It's probably the best time. And what I'm doing with mortgages, I'm sticking them on trackers at the moment. I'm having them at 2% above base on a HMO, 1.5% above base on a standard. Lifetime tracker, absolutely fine. As the interest rates adjust, my mortgage payment's gonna come down. I can't see any sense right now for myself to believe that things are going to get worse. I just can't see it. I think retail sales being at record lows and the government have just made the pivot. They have shown the inflection point, the moment where we go from reducing the economic output to the moment where we start increasing economic output. And I make no bones about this. I think what we've done with lockdowns and everything else will have lasting effects on this economy for decades. We've taken on such a significant amount of debt and we have reduced productivity to an absolute standstill during that period. I think it's a profound impact, but I also believe there are big opportunities right now for those that are willing to take risks. So me, that's what I'm doing with my money. Let me know in the comments down below what you're doing with yours. I know, Tom, you're about to be doing the same with yours, aren't you? So me and Tom, we're aligned. We believe the UK is going to have a really good 2024. I think America's going to cut. I think the Bank of England's going to follow. I think the government have signalled the point at which everything changes from restrictive to accommodating, and I believe that moment is probably about now. So guys, let me know your thoughts. I'll see you on the next one. Thank you so much for watching. Boom.